Hello everyone, welcome back to the channel. Today we are talking about the US stock market, which is sending confusing and powerful signals to investors worldwide. One day, markets look like they're heading for a major crash. The next day, they're pushing toward record highs. Dow Jones, Nasdaq, S&P 500. All three are moving sharply. And the big question is this the beginning of a stock market crash? Or is this just a pause before the next big rally? In this video, we'll break down what is happening in the US market right now, why markets are moving so aggressively, key risk factors and positive signals, and what investors should watch next. Stay till the end, because the final section could change how you look at the market. What is the US stock market? First, let's quickly understand why the US stock market matters so much. The US market is the largest financial market in the world. It controls global money flow. There are three main indexes. One Dow Jones Industrial Average represents large traditional American companies. Two Nasdaq Composite dominated by technology and AI stocks. 3 S&P 500 tracks the top 500 U.S. companies, considered the best overall market indicator. When these indexes move, global markets react, including Asia and Europe. That's why investors everywhere watch Wall Street closely. Current market movement. Recently, the market has been extremely volatile. Dow Jones has shown strong selling pressure. Nasdaq has experienced sharp swings due to tech stocks. S&P 500 is moving sideways with sudden spikes. What does this tell us? Big institutional investors are cautious. Hedge funds are repositioning. Retail investors are emotionally reacting. When uncertainty rises, volatility increases. And that's exactly what we're seeing now. Crash versus rally. What's really happening? Let's clarify something important. A market crash usually includes panic selling, liquidity issues, long-term fear. A market rally usually includes strong buying, positive economic outlook, institutional confidence. Right now, the US market is not in a full crash, and it's not in a clean rally either. This phase is called distribution and accumulation. Big players are quietly adjusting positions while smaller investors panic. Reason number 1. Federal Reserve and interest rates. The biggest driver of the market right now is the Federal Reserve. The Fed controls interest rates, money supply, credit conditions. High interest rates mean expensive loans, less corporate expansion, pressure on stock prices. Rate cuts mean cheap money, more investments, higher stock valuations. Markets are currently reacting to uncertainty, not decisions. Investors are asking, when will the Fed cut rates? Will inflation return? Is the economy slowing down? Until answers are clear, volatility stays high. Reason number 2. Inflation and recession fears. Inflation remains a critical concern. Even small changes in inflation data can move markets up sharply or trigger sudden sell-offs. At the same time, recession fears are growing. Some economic indicators suggest slowing consumer spending, weak manufacturing data, rising corporate debt. This creates a tug-of-war between optimism and fear. Reason number 3. Tech and AI stocks. Technology stocks are playing a huge role. Companies linked to artificial intelligence, cloud computing, semiconductors have seen massive rallies. But after big rallies, markets often pause. Profit booking begins. Valuations are questioned. Nasdaq's movement is closely tied to these tech giants. If tech stocks correct, the whole market feels the impact. Big investors versus retail investors. Here's something many people don't realize. Retail investors react emotionally. Institutional investors act strategically. When markets fall, retail investors panic. Institutions look for buying opportunities. This difference often explains sudden market reversals. Is a crash coming? So, is a crash coming? At this moment, no major liquidity crisis, no banking collapse, no systemic failure. That means a 2008-style crash is unlikely right now. However, sharp corrections, short-term drops, high volatility are very possible. What should investors do? This is not financial advice, but general guidance. Avoid panic decisions. Focus on long-term trends. Watch Federal Reserve updates. Don't chase hype. Smart money survives by staying calm when others panic. Conclusion. To summarize, the U.S. stock market is currently in a critical transition phase. It's not a crash. It's not a guaranteed rally. It's a battle between fear and opportunity. If you want daily updates and clear explanations of global markets, like the video, subscribe to the channel, and stay informed. See you in the next one.